You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 26th day of November, 2019. Thanks so much for joining us. Whoever you are, wherever you are, well, we're just glad to have you right here, right now. If you can't see my screen, go to our home page at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Alrighty, let's bring up a chart. S&P 500, Emini Futures. Let's look at our 4-hour chart. monthly trading zones. This is our first month for the monthly zones. We have been publishing the weekly trading zones every Monday morning since December 14th of 2009. So we're coming up on our 10-year anniversary. The most incredible thing of all about the zones is they're still doing today exactly what they did 10 years ago. And in an ever-changing world, in a marketplace that's ever evolving, as they say, to find something that constant, that consistent, that you can anchor yourself to as things change around you, it's kind of a big deal. At least it is for us. So if you're new to the show, new to CFRN, as I go through these zones today, if you have any questions about how we use them, what they represent, what good are they, just ask. Put a question in the chat box. We're always happy to answer your questions. I don't monitor the chat box on YouTube, but if you log in through the site here, we do have a chat box, and we welcome all questions. Okay, so back to November 1st, we opened, these are 4-hour candles, we opened right into a monthly zone, made the journey up to the zone overhead, spent 10 days consolidating up to the zone, down to the zone, back and forth, and that brings us to this trend line, which we broke, and that began the journey to the final zone overhead. Okay, 3140/45. Didn't get there on the first push. Came back to support at the zone below. Price is always trying to get to a zone, whether it's a weekly zone or a monthly zone. Price, from the moment the market opens Sunday night at 6 p.m. Eastern till Friday afternoon when we close for the week at 5 p.m. Eastern, price is on the move, and our zones provide a framework, whether weekly or monthly, to give you an idea where price is trying to go. Okay, it's nice to know that the market's moving higher, just as it's nice to know that the market's moving lower, but it's even nicer when you know where it's trying to get to. And right here, there was a gap higher open Sunday night. You'll notice here, after we broke this trend line, there was this attempt followed by this attempt. Both of those were turned down, turned away. And so Sunday night on Globex, often when price can't get through an obstacle under normal conditions, it will take this kind of an opportunity and just gap over it. Now, gaps on futures, on the indices in particular, almost always close. So we have no doubt that at some point in time, this gap will be closed. Typically, the Sunday night gaps close Sunday night or sometime during the Monday session. The fact that we're already into Tuesday and really haven't even made an attempt to close the gap shows just how bullish this market is. So we finally made it to the zone, 3140/45, overnight last night. It happened during the 1800 candle. That would be the Globex open, 6 p.m. Eastern. Now, the fact that we hit the monthly zone, that's math and science. The fact that we tagged the highest zone, 3145, to the tick, that's just luck, okay? That kind of thing happens. Zones are an area, whether they're weekly or monthly. Now, in the case of the monthly, we can see that price made each turn, with the exception of course, here, price made its turns at the zone, right? But sometimes you come up a couple ticks shy, like this pullback right here, okay? Now see, on this pullback, we touched it. On this pullback, didn't quite get there. We did get to the top of that trend line. It's called a trader vig. and then off we went. So last night, when this candle printed, I commented in the Telegram discussion group with all of our traders that this could potentially, not a forecast, just an observation, this could potentially be the high of the week, high of the month. We're getting ready to challenge that idea, it looks like, right here. So we'll talk more about this. We'll break it down. We'll get onto a smaller time frame during the course of today's broadcast. I attempted to upload a video that I could show you, but it is in the handout section, so anyone that would like to watch it, it's a short 3-minute video from New Hope. It's a recent one. It was just sent to us the other day. Agnes is here, Agnes and Little D. For those that don't know, Pastor Chris and Agnes, husband and wife, born and raised in Uganda. My wife and I met them 20 years ago. God spoke and said, build an orphanage, and so being obedient, we did, and so here we are 20 years later. And let me see what happens if I click on that. Oh, I think I know. You know what, if I just stream it, it'll be all herky-jerky. So I'll get it uploaded properly tomorrow. I'll show it to you tomorrow, but if you want to watch it in the meantime, just go to the handout section. That's where Michael typically puts those files with the trade setup and explanations of the trade setups. If you look in there, you'll be able to see it. Okay? All right. Let me give you the numbers from around the world. Cash markets, starting here in the U.S. Currently, the Dow, let me grab fresh data. Currently, the Dow up 60 points. NASDAQ up 24. S&P 500 up 7. The Russell 2000 up almost 5. Russell leading the pack to the upside. The Russell has already exceeded its highest weekly trading zone for this week. In the commodity basket, crude oil up 33 cents, trading 58.34 last. Gold up $2.10, trading 14.59 last. Now, for those of you who took advantage of that radio swing freebie that we put out 2 weeks ago here on the show for gold, and that was to consider being short 14.75 for a move down into that 14.50 range, that bell's for you. Congratulations. In the Asian markets, at the close, Nikkei posted a gain of 80 points. Shanghai posted a gain of almost 1 point. And the Hang Seng dropped 79. And that's the first off day for the Hang Seng, I think, in 3 sessions. In the European markets, at the close, FTSE up almost 7. DAX down 10. The CAC up 4.5. Now that gives us a mixed day in Asia, a mixed day in the UK, and so far it's a big green Radio Tuesday here in the US of A. Let's go to Michael and get a recap of what happened in the live training room this morning. It was good stuff. And then I'll be back. We'll talk to John. We'll take a look at our Concierge Trade Alerts. We'll take a look at Logic 247. All that and answers to your questions.
All right.
All yours, my friend.
I got it. Here we go. All right. Good afternoon, everyone. Today is Tuesday, the 26th day of November, 2019. If you have not taken a free trial with us and you want to take a free trial with us, you can go to the homepage here at CFRN.net. Right here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that or any of the other things that say free trial, if you click on any of those, it's going to bring you to this page, eminitrainingschool.com. You could just go directly to this page if you want to. And here, all we ask for is your name, your email, and your phone number. And you hit register now. Once you hit register now, you will be sent a confirmation link. You you must click on the confirmation link. Okay? If you don't click the confirmation link, we don't know that you took the free trial. Okay? Okay. The spreadsheet. Here it is. Okay. So this morning, well, first of all, if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 26th day of November, 2019. We made 2 ticks in crude and 30 ticks in gold. Put us at plus 320 on the morning session. Today it took 7 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 7 trades. On the month now, we're at $2,711. That's over 18 days, averaging $150 per day. And on the year, we're at $33,497. That's over 215 days, averaging $155 per day, $155.80 per day. Okay, that is all that stuff. Now, we'll go through what did and didn't happen in the live trading room this morning. Okay, started out here, we missed the first trade, which would have gotten us the goal for the day right there, but we missed that one. We did grab the second trade right here. We picked up 5 ticks on that. Then we had a break even there. Then we picked up 20 ticks on that to put us at plus 25. And then 5 more ticks right there. Just looking across the markets, and it doesn't look like there was much opportunity during the break. Right here at 11:36. You could have shorted right there, but you probably would have stopped out right there. You could have shorted again right here to get it back. And that was it on the gold. Okay. I know we had a big leg up here, but the slingshot was not set up to give you anything. There was no, it just was not set up to give you anything. So that was gold today. We were plus 30 on gold. The euro, once again, absolutely nothing. Step 1 is make sure you have a trend. And we did not have a trend on the euro. It still doesn't. I don't know what's going on with the euro. Let's check the volume on this. Hang on. And then we'll go to a daily. You see, even on the daily, the volume peaked back here, September 11th, 12th, and it's just been garbage since then. But it is what it is, right? We'll trade it when we can. We had one day last week where we made 16 ticks on the euro. But so the euro is a long-term hold now. Excuse me. All right, on crude, this is where we got the goal for the day, right here. First trade this morning. We picked up 10 ticks there. Then I missed this short right here. That would have probably doubled or tripled it. And I missed this one here that also would have probably doubled or tripled it. And then I stopped out here. And I was looking. Excuse me, I don't want to keep hacking in your ears. I was looking for the green line to get up into the cycle. When it did, I had drawn that line in there and I said it should close up above that level. And it did, to continue the trend. But then we got into the break. And during the break, there was really nothing that we could do. using the trade setups that we use in the room. Okay, and the ES, I mean, it looks like the euro, really. It's just horrible. Not a whole lot going on here on the ES. All right, step one, make sure you have a trend. So we never got step one today on the ES. All right, let me jump back here and tell you again, because I have to say this. Today is the 26th day of November, 2019. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down to the bottom. And today we made 2 ticks in crude and 30 ticks in gold. Put us at plus 320 on the morning session. Today it took 7 minutes and a single trade to get to the goal for the day. At that point, we're up $100 a contract. And we took a total of 7 trades. So on the month now, we're up $2,711. That's over 18 days, averaging $150 per day. And on the year, we're at $33,497. That's over 215 days, averaging $155 per day. Now, again, that is one contract, 2 hours per day, with a whole bunch of distractions. Okay, let me close that and bring this up. If you have not taken a free trial with us and you want to take a free trial, go to the home page at CFRN.net. Over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you will be brought to this page, eminitrainingschool.com. On this page, all we ask for is your name, your email, and your phone number. Click on register now. Once you do that, you'll be sent a confirmation link. You must click on the confirmation link. Okay? If you don't click the confirmation link, we don't know that you took the free trial. Okay? Anybody have any questions? Not yet. Nope. I was going to say, with that, I will pass it. I just asked if there were any questions, and I was giving them a chance to type them in. But anybody? Any questions? Yes, indeed. It's a marathon, not a sprint. There you go. Okay. Chipotle. That's funny. Chipotle. That's funny. I had honey chipotle chicken last night. Yeah, they're over here, but I don't eat there. But I went to Chili's. Yeah. Well, anyway, yeah. Kevin said he was having trouble putting on his weekly trading zones. You got to this right here, Kevin. CFRN WTZ. Add that, and then take out of the email. Yeah, Ninja 7. Out of the email that you were sent yesterday morning at 6:15 Eastern. Copy the string of numbers and just post the string in here. And you see here, WTZ count. You got to make sure the count matches the one in the email. Yeah. Yeah. Start out with an empty space. Okay. And that's all you have to do. That will do it for you. And what I do, Kevin, when I put the zones in, hold on, back it up. You see how I put a rectangle on it right there? Because sometimes you won't see them. Sometimes they won't print. In DT Pro, well, DT Pro has it in the indicators section. Okay, it's got it right here, and if you don't have it right there, it'll be in the imported section. Okay, Bill. Yeah, I mean, I put in at the beginning of every week, I delete all my drawing objects. You know, you click that right there, and then you hit the X, and that will delete all your drawing objects. And then I'll put the rectangles on as we approach the zones. I'll put the rectangles on because sometimes the actual lines, for some reason, whatever reason, I don't know why, but they don't show up. But the rectangle always will. Okay, so that's why I do that. Okay, and that is it. Yeah, you can have the charts back. We'll pass it back out. Fabulous Phoenix, Arizona Studio A overlooking South Mountain, America's largest city park. I got to say that every day. Yeah. Mm. Mm. All right. John just popped in, by the way.
Hi, happy Thanksgiving. I'm just about back up to speed. I mean, listen, these things are very intricate and complicated. There's nothing worse than a computer, misbehaving on you. It's very, because especially when you don't know where it's coming from. But I had all the screen, I had a dozen screens connected up, and just wouldn't. Nothing happened, and I was just mortified because it was working. I had everything working perfectly on Friday. It was just like exactly how I wanted it. Everything's going gangbusters, and then unfortunately, something happened over the weekend, and it just in order. So sometimes if something goes wrong, you get a voltage spike or something. Your computer throws the windows out, and it may not remember your original layout. So what I did was I shut it off because when you shut it off, it remembers the last setup. Okay. And then normally you restart and everything comes back together. Well, when I went to restart it, nothing happened. It was kind of crazy. And so I had to take it to the computer shop. Of course, as soon as I plugged it in, it started right away. Anyway, we changed the memory configurations around a little bit and got that all straightened out. Well, at the moment it's 64. But I'm considering going up to 128 still. Just to right. It's really smooth, at 60. There's still a little, I think you could use the 128. So I'll just run it like this for a few weeks. So anyway, I came back, plugged all the screens back in. Guess what? I mean, you gotta make this stuff up. It doesn't want to start again. So I pulled out some of the screens, and then guess what? It started right away. So then I just pushed each screen back in as the machine was running, and they all came back up. And it even remembered the layout, which was crazy. I wasn't expecting that. So I think I know the tricks of this machine now in terms of future. Well, they're pretty powerful. They're apparently the fastest video cards you can get. They're really, they're quads each one. So there's 3 of them. And they're little mini display port connectors. Well, you can actually, you can technically have about 16 monitors. It's possibly, I think you can even have 24. So it's but the way I've got it laid out now, it's really terrific. And I can use different things like, I've got the best kind of layout I've ever had. I usually play the NASDAQ rather than the S&P, but the S&P happens to be going better today. It's kind of outperforming the NASDAQ, which is something to be careful of. But something happened last night. I haven't really had time to see what it was about, but you saw how it gapped up during the night pretty strongly. Yeah, hold on a minute. I've got. Yeah, that spike last night. Yeah, whatever that was, and it came. I mean, Yeah, I mean, it was, look, what I would say to people right now is, and I've been saying it for a while, you just got to buy the dips. You know, anytime the market gives you a pullback like what we had this morning, you gotta take advantage of it, because this market's in a super power. I was just actually thinking, remember like a month ago or even 6 weeks ago when we were kind of ending those corrections, and I said, wow, you know, look at the, you know, as soon as you saw the market go, you know, remember we used to talk about the big lever in the sky going from bearish to bullish, you know. and you know, we basically had that sort of almost 2 months now, 7 weeks ago, where we had that sort of pretty sharp sell-off, and then everything sort of started turning bullish, and stocks really came back, and I said, this doesn't look like a bear market at all, looks like very bullish. And it was about the same time as we had Garrett on, and he showed us that super strong breakout on his chart, which I said, well, it looks like the beginning of a major move. And I think, look, you know, the news, everybody's in a good mood. Thanksgiving, I did say to try and get positioned ahead of this Thanksgiving rally, because it's probably going to keep going right into the holiday, and it's probably going to gap up again right after Thanksgiving, you know, on the Black Friday and maybe even the Black Monday. So you know, we've had I mean, this test overnight coming back down probably tested that gap yesterday. So now we're pushing higher again, and it's pretty remarkable what's going on here. And I, you know, there's a lot of Charles Payne was talking about 20. Some huge number of stocks are up more than 20%, and you know, but buying the dips judiciously is probably the way to go until we get something to the contrary. So yeah. Right, and you made a great call, because I remember the other day you were looking for further downside before that crazy, and you and I were on when it happened, when that news came out on the Chinese thing that pushed the market down, and that really, it was a little bit of a hard bottom to pick, that last bottom we had, but it's turned into a pretty formidable reversal. And so, look, we're probably going to run into a little bit of trouble up near this spike from last night. In fact, I would venture to say that we might, you know, we're coming up against some resistance, at least on the NASDAQ right now. Yeah. Yeah. Yeah.
Well, also
look,
in the weekly zones, when we're also with the highs on the weekly zones on the Tuesday, and you know, that's a big deal. That's always significant, and
yeah.
usually by the end of the week.
Yeah. If you could go back to the previous chart, I wanted to show you something there. Oh, yeah. Okay. Look, that's that's actually a pretty good chart to have up. I might actually add that to one of my charts right now that I've just laid out, because look at that. Look at the tests we had. I guess that was the downer before we started this uptrend, right? These tests, but look at the way they spiked and really tested the 3100 level. See that? See those spikes? That's usually, I've also remarked before, when you see something like that, you have to kind of go for it. You got to kind of get on board, because the rally can surprise on the upside, and that's what we've seen. So yeah. Yeah, and also it's a high quality bottom because it's something that actually this is a pretty rare phenomenon. Actually, you don't often see that. I wish I could mouse on on your chart so that everybody could see where I'm pointing to, but yeah. No, it's just it's okay. I just want to. Yeah, I was just kind of literally circling that bottom, that where you've got your mouse right now, just underneath that. So yeah. So that, and look, we didn't actually see that beforehand, but having seen it and seeing where the market's going, I mean, we could be on our way to 3,200 before you know it. If we take out this, I think you got a legitimate look. If we turn down from here, we might be in for a bit of a problem. But I want to tell you something else today. The interesting, if you remember what I said about gold and silver going into Thanksgiving, I kind of said, look, it could bottom next week, either pre-Thanksgiving or post-Thanksgiving. Sometimes they knock it down one more time after Thanksgiving, but I think we're in buying territory again. This was a pretty sharp reversal this morning. We went down to 1456 on the February gold, and we're $10 higher right now. The silver is also significantly higher off a retest of the 1680. We're back over. Yeah, back over 17 on the silver. So remember when
December
these
gold too.
Yeah. Sorry, I actually switched to February already, but yeah, but the
end of the month. The end of the month. So probably Monday. Well, Sunday for you. But Monday on my charts, probably.
Yeah. Look, this is an outside day. I didn't see that until you just put that chart up. So that's kind of interesting. Look, the silver has a habit of coming off funny looking bottoms that you don't necessarily think, you think might be another leg down. You can't, obviously today, if you start taking out today's lows, either way, we're probably going to have some sort of a spike down. But isn't that interesting? We actually looked at that a while back, if you remember. So if we were to go up from here on the silver and gold, I think it would be spectacular. Actually, I think we could see. Yeah. And that move is coming one of these days. Because look, when you see, as I've said before, look at the way this thing bottomed. You had a lot of 1-2s. You see 1 2 1 2 1 2 all the way up, small ones. This looks like a big ABC type of correction here, and the next up move is directly proportional or inversely proportional to the size of the correction. So eyeballing that, you could argue that we're headed for the low to mid 20s on the silver in a pretty profound and dramatic way when it happens. Because what I think is going to happen is there's going to be a more vertical up move in the metals. Because the next move to me is probably a third wave to the upside, and it's going to be pretty powerful. So, and the higher the market goes, the more bullish are underlying that's going to eventually inure to the silver and gold markets. And if there's an interesting article just came out from Doug Casey, and he is calling gold. Yeah, no, he is. Yeah, I met him in the old days. Known him for quite a while. I've always liked his stuff. He's a bit of a self-promoter, but he's got good people working for him, and he's got a hell of a record. Just in all kinds of alternative investments, and also, protecting people from bear markets. And he's making the case as that gold is an asymmetric bet on the future, which I hate to use this as an analogy, but whenever I hear the word asymmetric, you have to be reminded of 9/11, because it was relatively a low budget, low personnel operation that created a monument, trillions of dollars in damages. So what we're looking at when you say an asymmetric bet on the future in gold, you're sort of talking about 10 to 100 times upside, and 100 times upside in stocks, and 50. I don't know. I'll have to look it up. Well, asymmetric is kind of, unconventional warfare, I think would be, or unconventional, investing, if you like. I think you could call it, asymmetric.
Yep. I just lost his audio too. What asymmetric means. Well, I mean, we've been saying that daily, about gold and the ES. Mm, that is true. I'm looking at him right now. John's mic is wide open. I don't know what I don't know what happened. You want to ping him? Okay. All right. Does anyone have any questions about any of this stuff? Dwayne's got the charts right now, but I can always take them back and show you anything you need to see if you have questions. But you got to throw them out there for me. Okay. I mean, you all know I don't watch news, so my whole world is right here in front of me. And, well, of course, my family, my kids, and my wife. She's not really my wife, but my almost wife. Okay. Oh, there he is. Nope, the last question was on weekly trading zones. Oh, he lost his internet connection. Okay. Man, getting a new computer just sucks. I try to do it as infrequently as possible. I mean, but I have a whole bunch of them here in the house. You know, I have one here. I have one over there. I have 3 in the garage. Jade has got one. Jake's got one. Macy's got 2. And I have my laptop here too.
Oh, is that your computer inventory?
Yeah, my travel kit.
I did speak to John, and the whole thing just went kaput, just dead in the water.
Yeah, he said he lost his internet connection, right?
The whole system shut down.
Really?
Yeah.
Wow.
So.
Yeah, that's no good.
Yeah, he's been struggling with this thing since he got it. Hopefully he'll get it. He said he's going to try to get it back up, and he'll pop. I told him we just leave his mic open, so when he comes back, he can just start talking. So.
Yep. It's
okay.
Yeah.
All right.
I was just saying I hate getting a new computer, and
getting adjusted. Well, I'll tell you, getting a new computer is a challenge, but I think what's really a challenge is when you switch trading platforms. That sounds like John.
It does. John, are you back? Sounds like he was back.
Okay. Well, I'll keep talking.
Hello?
Oh, there you are.
There he is.
Okay.
Okay. Yeah, it was some sort of a little glitch.
Okay. All right.
Okay, hold on a minute. Sorry.
Go ahead. All right, guys. So let me. We were on the S&P, so we know that the Concierge Trade Alert. Every one of our traders had this opportunity last night. Shows up in the Telegram channel. In fact, we did not recap Logic 247 yesterday. So I've already showed you what the Concierge Trade Alerts look like, and so you had an opportunity to just grab a screenshot there.
Okay.
You ready? All right, guys,
yeah,
we'll pick
yeah.
up with the recap after we talk to John. Go ahead.
Yeah, actually, that when you get a spike like that coming up and testing where that little area is a bit of a problem. So, we could come back for a C wave. If that's an ABC, we could have a C wave.
Mm-hmm.
Could take us back maybe down to the 3120 or 15.
What's your take on this gap here, John? Now, we have our thoughts about gaps and whatnot, but how do you see gaps? How do you put them?
Well, if it's an exhaustion gap, it might come back and try another shot at it. Even before tomorrow. It's not. Listen, there's no guarantees that the market's going to rally into Thanksgiving, but it's usually
yes.
When in a strong market, it's more likely. But in just the same way as this overnight spike, caused the market to go a bit negative early this morning, and then resume upwards is sort of a could happen on a larger scale this afternoon, because the stocks are getting a bit overstretched here, and maybe a correction is warranted.
Well, we've got a high, and now we've got a lower high. So it looks like we're headed back to dip below this trigger again. Now,
it could be. Look, it could come back and actually, or not necessarily go down to the gap, but it could come back towards it and test it to some degree. So that's definitely it may it may be short-lived, this pullback, and it may be able to get the strength to go back up. I think if we take out 3140 again, 3142 or so, there's a chance we're going to go out and take out that spike. But we'll just have to see. By the way, I did have something interesting to comment on. Mm-hmm. Yesterday was a pretty unusual day. We had 3 major takeovers in one day, and also the reason why the market gapped up on Sunday night was actually because of what China had some comments on, or some kind of
intellectual property.
Exactly. That definitely was behind that. So, but we had three major takeovers.
Who were the 3, John?
Medco, MDCO.
Oh, we looked at that chart yesterday. Okay.
Yeah, Tiffany got taken over by LVMH. That's a huge deal.
LVMH.
And
I'm not familiar with them.
Yeah, I remember I used to kind of prep people for these takeovers, and unfortunately, because of all the drama I've had to live through in the last week, I was not able to really focus on things as much as I would have liked to. But because, when you see, listen, if you're a speculator, if you're willing to risk money, when you see talk of, that somebody's in talks to take over a company, it's not a bad idea to take out some options on that company, or even buy the stock in anticipation. And had you done that with Tiffany and Medco, you could have scored a double in one day, which is pretty unusual. I forget the third one right now. I'd have to go back and check, but it was a big one too. And look, there was another company. Oh yeah, remember I mentioned KRTX on the which
here's a daily.
IPO'd.
Now wait a minute. Something's wacky with that chart. It's printing double or something. Here, you go ahead and talk. Let me fix this chart.
Yeah. So the KRTX, that's the one that went from $20 to $150 in like a day or two, and it's came back it's down very sharply today. Got knocked down, but I would, that's some kind of a brain problem that they had. And when I saw the Medco, I got confused with it. I didn't realize the Medco was a cholesterol deal, and how powerful it is. They can cut your cholesterol in half in just a couple of injections a year, which is pretty formidable. And so it's kind of a no-brainer deal. If I'd known that, I would have been all in on this thing. Because
it's a $450 stock. Am I on the right stock? This LVMH?
Yeah. He's one of the richest guys in the world now. He's about the third or fourth richest guy in the world.
Oh, Louis Vuitton. Okay.
Yeah. So it's definitely up there in the clouds.
So Louis Vuitton took over Tiffany. Interesting.
Yeah. If you remember, a few years ago, we called a few takeovers ahead of time, and they actually came in. One of them was about $50, and it ended up going for $90. So these, we're probably going to be in a takeover rich environment for the next year probably, and so I'd be paying a lot of attention to any kind of mentions of takeovers or in talks to buy companies. The other thing was Trump. I think it was Trump said that. It was Stuart Varney said that the markets have risen by 11.3 trillion since Trump was elected. If you add the real estate to that, it's about 2.7 trillion. That takes you to 14. Then you take the cryptos and the underground economy, automobiles and other things like that, other assets. I think you can make a pretty good argument, not just for a 15 trillion improvement, but probably even higher, 16 or 17 trillion. So this is an enormous, this is why the economy is so strong.
Oh, the other takeover you're thinking of is Schwab and Ameritrade, perhaps.
Oh, that was the one. Yeah.
Schwab will now have $5 trillion under management.
Yeah, and I think that makes them the biggest in the world.
Yeah, it does. Yeah.
So that's that's an awesome accomplishment by this Charles Schwab. It's just incredible what he's done. I mean, you know the story about him.
I don't know.
When he first founded Schwab, he sold it to Bank of America, and they messed up.
Really?
So badly. He ended up buying the company back from them for a fraction of what he sold it for.
Nice.
And rebuilt it up again. I mean, it's just amazing what this guy's achieved. And it's interesting because Scott Trade was taken over by I think Emini Trade, so he's really gotten a huge, a huge database and a
I'm
huge.
surprised no one's screaming monopoly yet, but they probably will.
I think look, he's got Merrill Lynch and Bank of America to contend with, and the J.P. Morgan and all
that's true.
Morgan
That's
Stanley
true.
and all these guys. So he's. I mean, listen, who's going to complain? What are the government going to be upset about if you got free
trade? I mean, how much this landscape has changed since you and I met in the late '90s. I mean, back then I was just trading stocks, and I was doing it through a flesh and blood broker. And I was paying about $75.
Yeah, it used to be $100 a trade on commodities. You know?
I was paying $75 to get into a trade, and then I was paying like 2% of profits to get out, if there were any.
Even 120 or even 150.
Yeah.
So, yeah, it's a drastic change. And I mean, look, no commissions gives you a hell of a leg up. I mean,
it really does. Now, I think they still charge commission on futures.
Yeah, you're never going to get around that, unfortunately. But still, if you're paying $1 or $2, $1.50, $2, it's.
Well, we pay $5.80 a round turn on the indices, but we have a full service broker, which means if something goes awry, you're stuck in a trade, you can actually call and talk to somebody who knows what they're talking about, and you can get some assistance. Or if you just need, and our broker in particular, I mean, if someone's new to trading and they just need a little coaching, they need a little instruction, a little hand holding, he's there.
Yeah. So, that is a gigantic step forward. It's really the biggest thing that's ever happened in brokerage, this commission-free. It's incredible.
And Robinhood got the ball rolling.
Yeah, and there's a way they get compensated. That's all to do with this high-speed trading and everything. But it's they're not exactly crying poor. Robinhood has got a pretty good business model.
Yeah, they do.
And
they got a really slick app. I don't know if you've used their app or not, but it's top notch.
No, I haven't. But look, not so long ago, just in not much trading, and I was paying cumulatively about 8,000 commissions, 8,000 in commissions, or maybe even more than that. I mean, that's quite a bit.
Are you talking on a monthly basis, or?
It was probably over a few months.
Okay.
So I mean, you're paying $2,000 or $3,000 in commissions per month.
That's significant, right?
Yeah, sure, absolutely.
Do you need to grab that?
Yeah, I will. Listen, thanks very much.
All right, John.
Okay, bye-bye.
Catch you tomorrow. Okay, guys. All right, back to the S&P. Okay. All right, so one more time. Deal on the S&P. Consider being long, 31.34. Took a $550 per contract move up. Now, this is a swing high. Getting out at swing highs or swing lows, difficult, because nobody knows it is such a thing until after the fact. Now, this is an extended move, but we're not going to be able to get a good exit signal out of this because of the way it unfolded. I mean, the whole move took place inside of an hour. So an extended move, really, it has not only to do with price, but there's a time factor in there. And let me show you what I mean. Okay, now I'm going to go back to yesterday, this is a fine example. That's the Sunday night gap higher open. So let's say you were putting on a zone-to-zone kind of trade, or you're just comfortable getting along here and you'll take what the market offers. So we're moving higher. The little black step line is on the left side of blue and climbing. Our first indication that a move might be over, running out of steam, is price starts to walk sideways. The step line crosses blue and climbing on a long trade, and what we're waiting on is the first red candle that closes below that step line. In this case, if you're along from anywhere over here, your exit price would be $31.1975. Now, here we have another example, except this time we didn't get an exit signal. Okay, watch what happened. Price makes the move up. There's our leg. Run out of steam. Walk sideways. Now, notice here's a red candle that closes below the step line, but the step line has not crossed over yet. You got step up, step over, step up, step over, step up, step over, step over, step over. If this candle right there, if that had closed a tick lower or 2 ticks lower, then that would have been an exit signal. But it didn't. It closed above the step line. So it's qualified for an exit signal, but one just didn't appear, which enabled you to remain in this trade, if you so choose, all the way to here. Okay? Now, the step line has crossed, but this red candle doesn't close below the step line. So you're able to stay in this. You're going to miss the swing high. Nothing, can get you out reliably and repeatedly at a swing high or swing low. Step line crosses, and this is the first close, red close below the step line. So that would be 31.34. Now, I'm pretty sure, in fact, I know, I lost some drawing objects this morning. I had a computer hiccup of my own. Let's take a look at yesterday's Sunday. These would be the ones that came out Sunday night. Sunday night on the S&P at 6:25 p.m. Eastern, we said to consider being long 31.22. And so 31.22 is right here. Okay. So that was the first Concierge Trade Alert for the week on the S&P. Every one of our traders had an opportunity to participate in this trade. The trade to target, the initial target, in this case the initial and the trade to 31.26, 4-point move, nothing wrong with that. If you elected to stay in the trade because you had an extended move underway, you decide to wait for the exit signal. Almost got it there. Almost got it there. Finally got it here. So from 22 to 34, that's a nice 12-point move. $50 a point, $600 per contract traded. But just on the one from last night, 31.34 to the swing high, 550. Now, we made enough of a move to qualify as an extended move. There wasn't enough time for the indicators to catch up with price. Now, remember, price doesn't move because of some indicator or oscillator. Okay? Price moves based on order flow. The indicators simply serve as a visual aid to help you see and understand what the market's current objective is. What's the market trying to do? Okay, it's trying to go higher. Okay, where's it trying to go higher to? 52.53. Once price right here, see this bearish cross, and you see this close below that green line, we call that our BBC. Just means when we're above it, we feel bullish, we anticipate higher prices, and when price gets below it, we become bearish and anticipate lower prices. So the narrative changed right here, because now, instead of price trying to get to the zone overhead, right here, price tells us, you know what, I'm going to try to get to the zone below. But there were so many buyers in the order flow, it couldn't quite get all the way there. Buyers come in, drive it back up, get above. So again, right here, the narrative changes back in the other direction. Okay. On a very small time frame, this type of navigation could get you chopped up, whipsawed, whatever term you apply to it. But when you apply it in a somewhat larger time frame, not necessarily for the purpose of execution, but just for the purpose of understanding what the market's trying to do. And when you know what the market's trying to do, then all you have to do is agree with yourself to just join the market. Don't fight it. Don't argue with it. Don't try to convince it that it can't go any higher, because it can. So narrative changes above the BBC. Now we're headed for this trigger again, second time. And beyond that, zone overhead. Okay. We ran into an obstacle right here. This big candle last night, we already talked about the high, but let's look at where the candle closed. See, price didn't spend a lot of time up here. It was rejected pretty quickly. Let's look at that on a 5 minute. There it is. So all that noise happened in 5 minutes, basically. Now, we saw it on a 30-minute candle. That 5-minute candle looks almost identical. That's because most of what happened, in fact, how many minutes? Oh, too far. I'm looking for the spike at 8 o'clock last night, right? Right. So the 25th, 8 p.m. There we go. It basically happened in, we'll call it 2 minutes. Okay, that run up happened in a couple minutes. So price was clearly rejected. That makes the closing price more important, or gives it an added layer of importance. So if I do this, that's an outlier. Okay, it did run up and touch our monthly zone, quickly retreated. We come up into that area again, and we're getting rejected. Again, I said last night that, not a forecast, but an observation, this could be the high of the week. It's an all-time historic high, and it might be that for a period of time. So we're coming back to the BBC. On this trigger, all systems will go to get long. Blue and climbing. We hit the trigger, up we go. Back below the trigger, trigger again. This time it takes us up to 38 and a quarter. So a 4-point move, and then back below the trigger takes us up to 41. So that's a 7-point move. Now we're coming back to the BBC and basically the trigger. I know this sounds incredibly simplistic, and it is by design. Price is either going to hold here. The BBC will hold. It holds more often than it doesn't. If it holds, then we'll make another run at this swing high. If it doesn't hold, we will begin a journey seeking the zone below. Obstacles along the way, if this turns into a short trade here, obstacles along the way are right there. And right there, which is basically the zone, because zones are an area. Okay. So we'll be watching to see what happens. Do we close below the BBC? And if so, on the next candle, do we take out the low of that candle Or does it just get us below the trigger enough to have another run? Could it be all things to all men? Sure. We could get below it. We could make a run here. We could run all the way down to here. We could eventually find support at the zone. Do an about face. Trigger again. So far we have 1, 2, 3 valid triggers for the S&P on the long side. Okay, let's go to the Dow. Okie doke. On the Dow last night, consider being long, 27,948. 27,948. No, wait a minute. 25th. No. 8 o'clock last night. 26. Did I make it? Did I make a misprint? I think I did. I showed 27,948, and last night, when the zones came out during the 1800 candle, we were already at 28025. So I made a mistake there. I can't believe I didn't catch that. All right, well, mistakes happen. It's the truth about trading. So scratch the Dow. Go to the Russell. Let's see if I made the same mistake on the Russell. Last night on the Russell. Oh, remember I scrolled back a day? Okay, let me scroll to the right day. Last night. There we go. That would have drove me nuts. I'm glad I found it. Okay. 28050. Now we're cooking. 28050. Uh-huh. 28050. There. Alright. That makes more sense. Okay, so 28050. That's a long entry for the Dow, Concierge. Took us to the zone overhead, where we expect it to take us. It's what we anticipate. Price is always trying to get to a zone. For a long move, it's the zone overhead. A short move, the zone below. So we run from 50 to 130, so that's an 80-point move. $5 per point. $400 per contract traded. If you've earned the right to trade 10 contracts, and if you hang with us, you got to earn the right, okay? It's a $4,000 move. True story. From the entry to the target. The target was 28,130. We get back below the trigger. We trigger again. And this trigger takes us to 28,104. So we'll just call it 50 points. Fair enough. 50 points, $5 per point, $250 per contract traded, or for the 10 contract trader, $2,500. Russell. It's so much easier, so much simpler. There is no easy. It's so much simpler when you're on the right day. Okay. So last night on the Russell, consider being long 1629. Now, you're looking at the highest weekly trading zone this week for the Russell. None of the other markets have hit their highest zone yet. But the Russell does often lead the pack. These are small cap stocks. You know, the S&P 500, the Dow, these are huge, gargantuous companies. The Russell 2000, these are smaller companies. I like to think of them as being more nimble, quicker to react, often a much lower share price. So a lot of these companies are very popular amongst day traders because there is sufficient volume and the price per share, you know, sometimes $5, $10 range, that kind of thing. Okay, so the initial move from 29, takes us to 31.30. It's 2 points plus $100 per contract traded. Back below the trigger, here comes trigger number 2, and that takes us from 29 to 32.5. So that's 3.5 points. Back below the trigger, here comes trigger number 3, and that takes us up to 31.20. Okay, so 3 nice trading opportunities. And in this situation, you've got the trigger just above weekly trading zone. It is the highest weekly zone. But when you get long here, your stop loss, as you can see, you don't have a lot of risk involved because that zone represents good support. So in this case here, there's no reason to stick a stop way down here, because if it comes through that zone, there's a good chance it's going to head lower, as it did right here. Okay, NQ. Last night for the NQ. Oh, Kevin, I see your comment. I'll get to that here in just 1 second. I haven't had a chance to read it yet, but I will. NQ, consider being long, 83.83. There we are. Okay, so from 83.83, Alexa, 422 minus 383. Alexa, 422 minus 383.
422 minus 383 is 39.
Alexa, 39 times 20.
39 times 20 is 780.
So this was a $780 per contract move. If you got out at the exact swing high, which you probably didn't. If you did, it was by accident. $20 a point, that's what the NQ pays. So we're back. You know, when we get this little move here, well, actually it takes you from 83 to 90. That's $140 per contract move. So nothing to sneeze at. This little guy here only made it to 86. Okay, so nothing to write home about there. And then on this one, made it up to 84.02. So from 83, 17, 19, $380 per contract traded. Okay. So 1 trigger, 2 trigger, 3 trigger. Now actually we had a 5. We actually had about 7 triggers here. Okay, so that's the NQ. Let's go to Crude. Nice zone-to-zone move in the Crude. Concierge said, consider being long, 58.20. First move took us to 58.30. So that's $100 per contract move. Back below the trigger. From the trigger to the zone. Now the zone is the trade 2 target. On every long trade, the zone overhead is the trade 2 target. So that's $300 per contract traded. Or $3,000 if you've earned the right. Back below the trigger. And this time we get a 20-cent move, or $200 per contract traded. Back below the trigger, back below the zone. Now in each instance, okay, after this trigger we got back below. Then after this trigger we got back below, and this one. Okay, so we definitely got good support across here. If we were to trigger again, I would be very happy to personally participate in a move I would probably want to enter about 58.25, and I would be hawking it at about 58.35, fully prepared to ride it into the end zone if that's how it works out. Okay, gold. Here comes gold. All right, on gold, consider being short. 1453. These are current weekly zones. 1453. Down to the zone at 51. So that's $200 per contract traded. Oh, stand by. Hang on. There we go. Okay. So here's the first trigger. Now, here's an example of price not quite making it all the way to the zone. Swing low was 51.40. So from 53, so it's $160 per contract traded. Back above the trigger, trigger again. This time we make the move all the way to the zone. I commented in the Telegram channel last night. For those of you that have access, I'm sure you saw it. I commented about what a bullish candlestick and pattern that we have. Okay, when you learn candlespeak, okay, and if you don't know about candlespeak, let me offer you this. Just Google CFRN, The Secret Life of Candles, and just click here, and it will walk you through the most important candlestick signals. There's about 200. Some of them you might only see, they're so esoteric, you might only see them 2 or 3 times in your life, so I wouldn't worry too much about looking for those. Just focus on, I've got 22 slides, but I'm really talking about, that's because I do a number of variations on the doji, long-legged doji, gravestone doji, dragonfly doji, harami, abandoned baby, so these are the basics. If you learn these, in fact, Steve Bigelow, who taught me to speak candles, on his website, which is called, I'll think of it in a minute. If somebody remembers it, put it in the chat box. He was one of our first guests on CFRN way back in 2005, 2006. He gave me one of his most recent book, High Profit Candlestick Patterns. Now, this is the truth, not just a trading war story. I read that thing until the pages fell out. It was a quality book. It wasn't because there was cheap binding. I used to take my son to swim lessons. The year he gave it, or a few summers back when I was taking my son to swim lessons every day, it was outside in the Arizona heat. I think that had something to do with it. But I would sit there and read the book while Gabe was learning how to swim. And I think there's even a picture on the blog of all the pages spread all over my desk. It literally fell out of the binding. He told me last time I talked to him he would be happy to send me another one. So Steve, if you're listening, please send me a new book. He actually has a new book out now. There's no garbage in there, no magic, none of that. You see, there's no magic behind candlespeak. Candlesticks are a graphic representation of investor or trader sentiment for whatever time frame that you're observing. That's all. Here, bullish engulfing, one of the major signals. Here's what happened. When the elements of a bullish engulfing are broken down, an investor can clearly understand what was going on in investor sentiment to cause a reversal. 400 years of observations from Japanese rice traders has recognized the bullish engulfing signal as a very high probability reversal signal. Context is critical. After a downtrend, this is one of the greatest buy signals you'll get. What happened, now these were daily candles, but you'll see it on intraday charts. price on this candle actually opened lower than the close of this candle. This candle closed above the high of the previous candle. So you can see how this candle engulfs the previous candle. The reverse of that would be a bearish engulfing. It's equally as powerful, but only in the right context. Getting this pattern or this candlestick without first having an uptrend means absolutely nothing. It's a continuation signal. So, Secret Life of Candles, CFRN, I suggest you even maybe print this out, put it in a little 3-ring binder. If you refer to it daily for a few weeks, then you'll just recognize the candles, the patterns when they appear. In the beginning, you'll go, oh man, that looks familiar, and you'll thumb through your little binder and you'll go, that's it. You do that a few times, and then pretty soon, like with me, half the time, I don't even remember the name in my mind, but visually, I recognize it, and I don't even have to think about it, because I know what comes next. I know what my job is once the market speaks to me via the candle. Okay. Very, very bullish pattern right here. Sent us right up to the zone where we found good resistance. That's what we expect. Sent us back down to the zone below. Yep. Good support. Back to the trigger. Back to the zone. Leg and a retracement. And now the next leg of the journey. From here, gold. Market's trying to get to the zone overhead. There's your obstacle. Okay. Shrink it up a little bit, and you'll see, if you look left, once you clear this obstacle, and in a perfect world, not only would you clear it, but then you'd get a little pullback, and it would hold right there. The pullback would hold right there. And now, as Michael said earlier, clear water, that's a term from a lifetime ago, right up into that zone. 63, 65, $100 a point, that's what gold pays. $200 per contract move. Last night's concierge for gold, I think that's the only one where we had two-sided action. Consider being long 1461. And that's right. Hey, has anybody listened to Kanye West's new album, Jesus is Lord? I'd never heard it until last night. When I'm driving, I listen to Air One. Air One is the slightly more edgy version of K-Love. Both bring it. It's really that and NPR, National People's Radio. It's really the only thing I listen to anymore. And I didn't even know that song was in their rotation because it's a little different than the music they typically play. But I did listen to it, and honestly, I don't know that I got it, but I can see where many people would appreciate it. What I did like very much, in the middle of the song, there's a beautiful saxophone solo, and my son plays the saxophone, so I don't know that you want to listen to the whole album, but maybe Google up Kanye West, Jesus is Lord. It's the title cut from the album. Hey, tell me what you think. It's different. It's different. Now, some may say that this new stand he's taken is like some kind of gimmick or something. I don't know that I agree with that. Because of all the gimmicks, someone of his position and stature and money, if he wants a gimmick, he could choose any gimmick in the world. And honestly, right now, Christianity is not the most popular thing in the world. In fact, depends on which side of the political aisle you stand on. We get beat down just about every day. And depending upon which country you stand in, There's Christians getting beat down there every day. And I mean that literally. So, a lot of things he could have chosen. I truly believe it's his heart. Yeah, that's my opinion, okay? So, the fact that he's making a stand for Christ publicly, I mean, the lives that he's going to touch. I could travel the world and preach my little brains out, and I would never reach the people that he's capable of reaching with just that one song or that one album. So, good for you, Kanye. Keep up the good work. Okay, goal, making a run at that obstacle. Okay. Now, okay, at the trigger, we knew there's an obstacle overhead, right? Does that mean we don't take it? We don't take the trade because of the obstacle? Depends, okay? Is there enough room to run? That's the term that Michael and I use. Okay, from 1461 to the swing high at almost 63, that's 2 points. $200 per contract traded. Is that worth the risk required to put on the trade? For me, yes. Okay. Now let's drill this down to a 5-minute chart. Okay. Now there's the trigger. Okay. Same trigger we just saw in the 30-minute. Now let me add this. Question becomes, of course, as always, where will I put my stop? Okay. This is something that we teach all of our traders. We have a 3-step methodology. Anytime we have an alert or a trade opportunity presents itself, we have 3 very specific steps that we walk through. And then, not some joker on the internet or some talking head on TV, but the market itself will tell us where we need to put the stop if we want to participate in the trade, protect our backside, and hopefully not get stopped out. That might be the only missing ingredient right now in your trading plan. Maybe you're real good at picking the entry, but maybe you wrestle with that stop loss. Perhaps you're one of those folks who says, I always get stopped out to the tick. Well, we've all said that. We've all experienced that. We've all felt that way. Good news is it doesn't have to be that way. Okay? So if you want some help with that, you can become a partner, you can become a passport holder, or wait for it. You can book a free mentoring session. That's right. I'll spend 45 minutes with you, no charge, one time. Answer any questions you have. And even if you still don't become a partner or passport holder, which will be difficult at that point because of my irresistible charm, but that's okay. If you choose not to, fine. Hopefully during that 45 minutes, I can share a little something with you that maybe helps you going forward. Okay? All right. Did we get to the obstacle? Swing high. 62.5. Does that touch the bottom of the rectangle? Yeah. But don't read too much into that because it's an area. Everything's an area. Okay? So we covered the S&P, the Dow, the Russell, the NQ, crude, and gold. We haven't looked at bonds in a couple days. I do send out alerts on the bonds every night. So let's see what happened last night, because I haven't looked at it myself. ZBZ. Okay, and last night on bonds, the alert said, considering along 160.12, bonds pay 31.25 per tick. There are 32 ticks to a point. So from 160.12 to 161.12. That's $1,000 per contract, and we're a long way from that. But here's the beginning. Okay, we triggered, we pulled back, support held at the BBC. Now we have an obstacle overhead. If we can clear that, then we can make a run at that $1,000 high water mark. Okay, and while we're here, let's do beans. Okay, last night's concierge alert for soybeans, consider being short 891. And that's right there. Beans pay exactly the same as the S&P. There's 4 ticks to a point, $12.50 per tick, $50 per point. So when price goes from 891 to, we'll just call it here, 85. That's a 6-point move at $50 per point. So just down to this mark right here. It's $300 per contract traded. Okay. Do we have an exit signal? We do. Now, I showed you a long example earlier. Here's a short example. Step lines on the left side of red and falling as opposed to blue and climbing. As the move runs out of steam, price starts to walk sideways, just like it did here. Price starts to walk sideways. The step line crosses, and because this is a short trade, we're looking for the first green candle that closes above the step line, not below. So that would be this candle here. Closing price, $8.85 1/4. So basically $600 or $300 per contract traded. Okay. All right. Oh, I said we would go over Logic 247, and we will. Valerie just provided me with a recap up through the beginning of the show, and here we are. So far this week, this is week 69. We've had a total of 20 alerts. 4 never triggered. 3 are in the process. We've had 11 actionable alerts. So far, nothing has stopped out. We have averaged over the last 69 weeks, 20%. We have weeks of 0 and weeks of 10 and weeks of 14, and we had a crazy week of like 30 a few weeks back. But over the past year, it's averaged out to about 20% of all Logic 247 alerts do get stopped out. The difference between Logic and Concierge is based on previous price behavior, while Logic is based on current price behavior. And when those two different ideas point at the same important price, important area, that usually deserves a second look. Okay? All right. Time now. Good word for the day. Are you feeling it? I am. Oh, Kevin, I'm so sorry. Back to your question. Per insider at Thinkorswim. Futures are a totally different animal. I agree. When it comes to commissions, that is due to CBOE/Merck and how futures are structured versus stocks. Thus, no or very small break on the cost of trading futures. Thank you, Kevin, for that. And then Tim says, ES pull back to BBC, 30-minute. Next up close, enter for long. 2 p.m. candle, close or at the open. MA1 and cycle blue and climbing. Now, Tim, it's been a minute since you asked that question, but let's take a look. Okay, here's what he's talking about. Price pulled back to the BBC and the trigger. Okay. Question basically is, when do I get in? Is that basically the question, Tim? Brother, now we're printing a red candle. I'd probably wait for it to at least turn green. I just have a hang up about buying a red candle. If this thing turns green. Now, see, we're only 4 minutes into the candle. Okay, 4 minutes into the life of the candle. This thing turns green. I'd have no issue with getting long. Putting my stop right there. Not going to risk much. Because it's either going to hold and go or not. Obstacle overhead. Well, we got the big obstacle that I've outlined. We've also got the CFMA1. Even when it's blue, it can act as resistance. I'd much rather have it blue on a long trade than red, because then it's definitely an obstacle. Okay. In fact, so hopefully that helps, Tim. I mean, that's just that's the trade right there. Beautiful little opportunity. You could wait and go, 31. You could go 38 to 40. There's 2 points. Or climb aboard. But again, if you wait to get in up here, your risk is still down here. So if you're going to risk the same either way, might as well get in here. Okay? Because now you got a chance of going from 31.36 to 31.40. So it turns it into a 4-point opportunity instead of a 2-point opportunity. Okay? But yeah, you're absolutely on target. That's the trade. Okay? Now over here, what I was just talking about, and I wanted to mention this today, so I'm glad you brought that up so I would remember it. As price tried to rally here, it couldn't get red and falling. Okay? And see how red and falling just pushed it down, pushed it down, pushed it down. Once price gets back above the BBC, we know that's bullish. But when this thing turns blue and starts climbing, that's really important too. Okay? See how it just glides up the back of blue and climbing? But trying to get through red and falling. My best suggestion, I know I used to say I could go either way, and it can, but I don't even fight it anymore. I just don't even mess with it. I wait until price is above it, it's blue, and it's not climbing yet right here, but it's starting to climb. Okay, so, okay, that's my take on that. Hopefully that helped. If you have any more questions, please just put them in the box. All right, good word for the day. It's a necessary part of the process. Psalm 32:8 says, I will instruct you. Question: why are you still here? When Jesus saved you, why didn't he just simply take you to heaven to be with him? Good question, right? Well, here's the answer. He's not only interested in your final destination, he wants to do a work in you and through you on the way there. We get impatient when it comes to God's will for our lives. We just want to get there. But a great deal of time usually elapses between when God calls us and when we've fulfilled his will for our lives. And until we accept that, well, we're just not ready to go anywhere. We need to understand that the journey is an important process. It matters to God what you become on the way to where you're going. And following him in obedience through many unknowns, trials, and difficulties is an integral and indispensable part of your preparation. God uses this journey to teach you faith, refine your character, and equip you for greater challenges that lie ahead. In fact, if you're in the process of seeking God's will right now, and I hope you are, you're already fulfilling part of it in your life. Part of your job is to seek His will. God said, I will instruct you and teach you in the way you should go. Which means you got to listen and you got to be willing to be obedient when you hear the voice. Don't make the mistake of thinking that because you don't know all you'd like to, that you're not making progress. He said, my ways are not your ways, His thoughts are not our thoughts. Just because you don't have it all figured out, don't think you're behind you're behind in this journey. Not at all. Something is happening right now. Maybe you can't see it. Maybe you don't feel it. Something is happening in your life, in your spiritual walk right now. Either your faith is being stretched, or your patience is being developed, your doubts are being confronted and conquered, and your relationship with Him, this is the most important part, your relationship with Him, through the good times and the bad, is growing stronger and deeper. He always prepares us in advance for what He has planned ahead for us. I know that sometimes the struggle is uncomfortable, but it's a necessary part of the process. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.